So for the trades today, first a high level setting. You can see the daily chart here, and we've seen a lot of bearish price action. And what is most notable here that ES already printed or tagged this low from November, while NQ is still far away from that. So this is creating a high time frame SMT, not actionable at the moment. You want to see, let's say, a high time frame close or bottom first to know that we might be in for another move up. But so far, only lower highs, lower lows. What is interesting to see is that NQ was finding support on this daily fair value gap, closed the Friday within it. And what I'm mostly interested in here is this high time frame or this daily fair value gap, which is also aligning with the daily volume imbalance. So if I zoom in to H4, where are we on time? Let's just, because I don't want to. So this was the first day on Sunday. What we saw in the Asian session is that price was actually already giving some direction of price, which was lower. And to be bullish, I want to see on a lower time frame. Apparently, there's an H1 fair value gap here. I want to see price print a close above this level. But mostly we also want to see if we can break this cluster of fair value gaps. Also getting again above this daily fair value gap. So I marked out all these levels. Normally I only do H4, H1 and the M15 because I want to see price react in that region. Normally I only trade reversals. So this is what I want to see. So where we are in price, Sunday, normally my session starts, I look at the charts when London opens. So that's a bit before 3 a.m. Where are we here? Oh, we're already 4 a.m. So price was getting here. Let me also just automate this. And price was printing a 1 hour fair value gap. There was no significant, at least not a setup for me that I was interested in. Price ranged, not much going on, and it just showed weakness in line with Asia session, because Asia session was already showing 100, what is it, 60 move, point move down. Okay, so then I prepare for the US Open or New York Open at 9:30. There was no news, so it was not really interesting to have a look at that. And let's see, what did I want to see? Where are we now? Still at 5 o'clock. So price was developing. This can take a while. Let's speed it up. Price was showing some bullish momentum. And normally then I would look to see if we can rate this low. But then what was interesting was this 15-minute fair value gap was printing. I always mark out these levels. 15. Okay, so what did we get? Let's move a bit back. So price was showing two things. NQ did not tap the M15 fair value gap, while ES was already doing that. And for me to be interested, so my bias is bearish, obviously. And first, to be able to find a proper short, I want to see a manipulative move upwards, then showing weakness in its response in this situation in the M15 fair value gap, ideally an SMT as well. but this is not required. Extra confluence. So what I want to see is price tagging these highs, preferably also this high tagging or entering the M15 fair value gap and then showing weakness. So let's move to the 1 minute. I was interested in shorts, in longs, because I was anticipating a move up here. But I was a bit hesitant. Why? Because price already printed an SMT here. Apologies for all the coloring. I'll try to keep it as clean as possible. So I want this high to be taken. I will make it red. I want it to be swept. But MNQ is printing a SMT here. So it could be that this was already the high. We did not tag, because it can happen that ES already tags the fair value gap, while MNQ did not do it. Especially when it prints an SMT, this could be the move that ES was already indicating, hey guys, let's go lower. You could even say that you have a market maker buy and sell. I'll just do it quickly. Buy and sell, and the same here. Buy and sell, because you have consolidation here. First move, second move, third move, smart money reversal, and then price is moving down. So it could as well be that we get into an area here, maybe manipulate here as well, so tag these highs and then move down. But so I have to be wary, or at least alert to that option, that we might not end up there. But that's okay. I mean, that happens. We cannot control the markets. We can only react to it. So let's see what price is doing. I'm going to slow it down a bit. So price was actually going down violently. So normally you want to see a reaction after market open, which is here. And what I also saw is that while it tagged this accumulation area, and I think, yes, we printed an SMT here. I will not do it on the M5, but we printed an SMT here. So I saw a possibility for a move upwards and potentially a 10-hour reversal up in these highs, tagging this level. So especially now when volatility comes to the market, I'm extra aware. I set my alerts and then I wait for price to do what it needs to do. So here I thought that the opportunity for tag sweeping these highs and entering this FEG was already a lot higher, especially seeing this move up first. And this was actually a setup that I left on the table. I didn't take this, and in hindsight it was actually a good setup. So we print a solid SMT, obviously clear. I mean, it was printed over more than 2 hours. You could say, hey, this market maker sell model is now completed. It tagged the accumulation. It did not enter any SMT, but okay. We did have a proper FEG. I mean, we did print a proper SMT. And what you see now here, we have an IFEG displacement, because you could say there's a change in the state of delivery on these two areas. First here, but especially here. And then we correct. And I think we actually have OTE correction. Let me check it. OTE, yes, in the 62 area, preferably a bit, let's say when you have confluence, in my opinion, in the 62 or 70% with an FEG or IFEG, that's a proper long setup. So I did not take it, but in hindsight, it was a good setup. Either stop below the IFEG. Normally I take the last, let's say, the candle low that broke the FEG or IFEG, and then at least go for last high, which is here, or seeing that we have all this low resistance liquidity here. The magnet is sometimes a pain in the ass. You could expect price to tag up. So this was the potential long to prepare for 10-hour reversal, which is a solid, wow, 4-hour. Okay, so left that one on the table. Let's clear it out. So price was going towards that level. Let's see. And this requires patience. So actually, I think we passed 10 o'clock here. So here goes. So we tagged here. And now it gets a bit tricky because actually ES is printing above. There's no SMT here because it didn't tag this high, because otherwise you would have obvious SMT because relative to NQ, ES was already getting close to these highs. But based on the NQ setup, so no SMT, but we do have an M15 FEG, and we did sweep these highs. I don't think we took out these highs, but we did take out these highs. So this looks like a proper setup. And now the question is where to go short. And there are two ways to do it based on the models. I'll leave a link in the description below because I don't do any Discords or anything. I learned most of my stuff from free YouTube, but I am absolutely pleased with the value that Justin Werling, I don't know if I pronounce his name, is printing, or at least is giving to the community, and I love it a lot. So please go to him. I take no credit for this setup because I'm just regurgitating whatever is on the internet, and it works. So why not use it? So 30 seconds. A friend of mine took this setup. So that's the aggressive setup for an IFEG. I didn't take it because I was more looking first to see if we can get a change in the state of delivery. But this is your IFEG setup. Let's make it like this. So when price prints below, that's here. Let's say this one is not yet there, but this one prints. You go short, tagging recent low, which is here, but same applies. You have a lot of generated liquidity, so in potential you can take it up to here. Normally, what I noticed that if you still have an FEG open somewhere, price tends to bounce off it first, especially since we already went as low as closing the market maker sell model. So I would not immediately go for this drawn liquidity, but take it a bit higher up here, just to be sure, because let's be fair, if you have a 3-hour setup, that's wonderful. Do it every day, or at least twice a week, and then you're settled for life. So this is a potential setup. Go short here. I missed it, so I didn't take it. Price immediately reacts, so this is the reaction you actually want to see. And I was waiting for a change in the state of delivery. So this was actually quite agonizing to watch because take into account we're on the 30 seconds. So I'll move a bit back to the 1 minute. So what I saw, after this long range of up close candles, I want to see a close below this one. That's my change in the state of delivery. And when I have a change in the state of delivery, I can either go short on this level or try to find a fair value gap. So I'm going to delete this one because this was not my setup. It is a really good setup because here you would have already printed a 2.2 R within a matter of a few minutes. So what I want to see here is I want to see price rebalance. So I want to see price rebalance to the equilibrium, EQ, which is more or less here. So ideally, you want to see price get above this blue level into this FEG. So 1 minute FEG. I always try to mark it because otherwise I lose track of all the blocks. I'm going to delete this one. It's not my setup. So price was going down. Is this the low already? Yeah. So then price is trying to do the same thing as it did here. So I'm looking for a sweep of this level, and then I want to go short at the fair value gap, and I want to see price needs, I don't want price to close above the candle that created the FEG. So I'm going to place a stop above here, go short for my first target, which is a wonderful 2.4, but I think price will hit here and maybe even close this entire gap. So this will be my setup, and let's see, price did. Price tagged it and went perfectly to target. This is, in my opinion, the best of the best setups. So it actually closed the entire gap, and maybe even taken the 62 FIB. But for me, because I missed the aggressive opportunity, this is my best second opportunity for a wonderful RR. So here was the first target, and the second target was somewhere in this level. This is where I just babysit the position. And when I babysit the position, when I feel that price is starting to react, or whenever ES is already printing it. So we have a similar FEG, which was here. Then I take the last still open part. So NQ already responded more violently. And when I see one of the two reaching target, I close my NQ position. Because if ES is moving further down, then it could already indicate that price is going to reverse. And you can see and ES did not even mitigate the remainder part of this FEG, while NQ completely closed it up. It never reached this low, and it started bouncing from here. So this was the setup. Again, please check in the description where I get all my knowledge from. It's not self-invented, it's all copy-pasted, and it works. Good luck, guys.